Hello and good evening, everyone. Today's webinar topic is importance of insurance in risk management. So, for this, we have with us Ms. Nisha Sanghvi, ma'am, co-founder and director at Promore Fintech Private Limited, a certified financial planner (CFP) with over 19 years of experience. Nisha ma'am holds an MBA in finance and marketing and has dedicated her career to empowering individuals through financial literacy. She has conducted over 150 personal finance workshops in India and is a regular contributor to media platforms like CNBC, Bazaar, Red FM, Money 9, and the Economic Times. Her areas of expertise include mutual fund, tax planning, estate and retirement planning, insurance, and goal based investing. With her deep understanding of personal finance and a passion of educating investors, we are excited to hear her insights and practical advice in today's session. Now, a short glimpse about NISM. NISM is a public trust established in 2006 by SEBI, the regulator of the securities markets in India. The institute carries out a wide range of capacity building activities at various levels aimed at enhancing the quality standards in securities markets. Now, before beginning the session, I would like to request all the participants to note some important points. First, question will be taken at the end during the Q&A segment. Second, all participants will receive a participation certificate within 3 to 4 working days. Third, the recording of this session will be available on NISM YouTube channel. Now I request Nisha ma'am to begin with this session.
Hello, everyone. Good afternoon. I'm glad you all are here, and I hope at the end of the session you are at least little educated on how insurance needs to be looked upon compared to what you're looking today. My screen is visible to all, right? I'm going ahead. Right? Very important statement that I recently read on internet. Insurance doesn't stop risk from happening. It stops from becoming a financial disaster. Suppose if you some or the either point of time, if you ignored insurance, the situation will happen, but it will result into financial disaster for you. So it's very, very important that we understand the importance of insurance in our overall portfolio management that we do, right? So here is a typical family, individual families pyramid, right? On the right side you can see a pyramid where whenever you start your journey, right, money management journey or a financial planning journey, the foundation always is protection, right? When we look at protection, it means you're looking at covering yourself from any disasters or unforeseen event, right? Like life, health, disability, debt reductions, and emergency fund. Very, very important core of, or you can say a foundation where protection leads to the rest of the things which we can be planned successfully, right? Savings. Whenever we look at child education, retirement planning, home ownership, these are parts where you generally look at savings and then you invest, right? Then we go to the growth part where you're looking at investing, where you choose an asset class, bonds, shares, mutual funds, ETFs, fixed deposits, you name it, and the products are defined. If you notice over here, I have mentioned growth over here, right? So when we say growth, insurance cannot be an investment, right? Risk, there are investments where you take risk like futures and options, commodities, real estate, forex, right? And then is the core part, distribution, estate planning, and successful planning. What is important is, if suppose you skip the protection, which is the foundation part of a wealth management pyramid, the others might just feel lost or rocked. Okay, I'm going to further cover in my session that how if you are not taking care of protection as a plan in your overall money management, protection leads not protecting leads to your uh, imbalance of your portfolio, right? So when we look at risk management, these are five things that you should do with risk management, right? Maybe we can say risk, right? So risk retention, The first thing, very important, let's take an example on life insurance, right? You might say that I don't want to make a risk retention. The first thing you say is risk retention, which is you accepted that yes, uh, I am ready to accept the risk which will happen in case of an unforeseen event. Example, you choose not to buy life insurance, accepting that if something happens to you, your family will bear the financial burden, right? Why do we generally buy a life insurance policy? It's only and only for the beneficiary, which will be your family, in case of an unforeseen event when it happens. Suppose you choose risk retention, saying, I don't want to buy a life insurance. This is where your family will face a situation, right? The other is risk avoidance. You're trying to eliminate a risk, right? If we have to again relate this to life insurance, which means you avoid risky behavior like dangerous jobs, extreme sports activity like adventure sports, or anything, or not smoking, or not even drinking. You are trying to eliminate the risk, right? You're avoiding the risk, right? This might reduce the chance of early death, right? The third point is risk reduction. Risk reduction is nothing. Basically, you're trying to reduce the risk, right? When you say example over here, you adopt a very healthy lifestyle, get your regular health checkups done, you maintain fitness to lower health related risk, you eat healthy, sleep 8 hours, you have enough drinking water, you're eating your proteins, your carbs, your multivitamins, right? When you're doing it the right way, you're technically reducing the risk, but you are at risk, right? Risk transfer, the bestest way what we say is you should transfer the risk. uh, you buy life insurance, transfer the financial risk of your untimely or an unforeseen seen death to the insurance company, which will pay your family in the future. Here's a very small story. If I have to explain you very simply, example, say you are that one very important person in the family who's the breadwinner, right? When you buy a life insurance policy, which will be purely in form of term life insurance, it means that it will lead you to transferring the financial risk. It means that if you die, the insurance company is going to pay a lump sum amount to your family, right? uh, why does it happen? Because insurance company will undertake that risk because it's a business for them, and they know that when they are going to insure 100 people, one person may die, right? So they will pay that one family the money. But in our case, when we look at a situation, whenever you are taking a life insurance, the risk is with you, right? If you don't take it, the family will suffer a financial burden, right? So transferring of risk is the easiest way that we shift it, right? Risk sharing, right? Share it. Example, in group life insurance through your employer, premiums are shared or subsidized by the employer, reducing your cost and spreading the risk. So generally, if you're a salaried person, you are able to do a risk sharing, right? There are group term life insurance. You are salaried. If your children, if you're aged and you're watching me here, your children might be covered. So many times when we have interaction with clients, we come to know that uh, everybody says that I have some kind of insurance from my company. I have no clue what it is. It is 10 times of my basic. It is 15 times of my annual salary. It is 40 times of my basic plus DA. Number will always differ depending upon the company, how the product has been defined. What is important is you need to be secured. You need to be taking your risk seriously, right? If you're still not convinced, here's a classic example. You can't buy an umbrella once it starts raining. You're walking on the road and suddenly it starts raining. You start searching a shop to buy an umbrella. That's a bad idea. So we interpret the same thing in our insurance journey, that whenever we are looking at buying and protecting your needs, you need to buy it before the storm arrives, right? Or the before the rains begin, right? Before your health deteriorates, or before you think you're going to catch up on a lifestyle ailment, or before you even have a situation that might not cover you in the future, right? So very, very important. You can't buy an umbrella once it starts to rain. Protection needs to come before the storm. Insurance says that because let's look at a classic example on a health insurance. You are hale and hearty. You might say that, Nisha, I have my health insurance through the company, but that is only 3 lakhs or 5 lakhs depending upon the grade. Now, if suppose something like a cancer or an organ transplant is required, right? In that situation, in a city, metro city like Bombay, Delhi, Kolkata, Chennai, medical cost is really high. What is important is you can't tell the ailment that, okay, I have a cover of only 3 lakhs through corporate. Please don't come beyond 3 lakhs. That does not happen anymore, right? So it's important that whenever we are looking at a coverage, you need to buy it when you're fit and fine and you think it's waste of money. That's the day you go and buy a insurance policy, which will be term life, health insurance, or whatever you're trying to protect your family from, right? Very classy statement. Protecting life and health isn't optional. It's the first step towards lasting wealth, right? So, why do we say this? Another quote that I liked on the internet. If we go back to our wealth management pyramid that I showed at a few slides ago, in that, if you see, there is risk protection done at the bottom, which is the foundation. Then you build upon all the goals, your investments, your risk appetite that you choose to invest into a product, right? Whenever we look at that, what happens is if there is no protection created, no insurance bought, one ailment, one hospitalization might take away all your life savings. So rest of the pyramid gets shaken up. So very, very critical and integral that life and health insurance are non-negotiable into a financial management journey. So it's important that we look at protection as an first step and not towards the end or no step, right? So you might say, okay, Nisha, we agree to what you say. How do we start? Where do we look at, or where do we have our first step put upon, right? So the first and foremost step, let's know what can hurt your wealth. It needs to be protected, right? So it's very, very important. Life insurance. We've been hearing so many ads which says zindagi ke saath, zindagi ke baad, so many emotional ads that there has to be somebody to take care of your family after you. What is important is you buy a life insurance, right? So here I'm going to give you a concept. What is life insurance? Whenever we are buying a life insurance policy, it means we are transferring risk, right, to an insurance company who will take care of your family in an unforeseen event. Now, as we talk, in our country, there are more than 24 life insurance companies in India. How every insurance company will have different kind of products, maybe in a detail, maybe it's for some other day that we cover. But what you need to understand is, while looking at the wealth management pyramid at protection level, you need to have only and only term plan. Okay, now I'm going to give you some pointers to look at term plan. Term plan is a product which every insurance life insurance company will have to available to offer you. Whenever we look at life insurance in form of term plan, uh, very important concept to know on term insurance is, if you die, the family gets the money. Okay, very, very important. So whenever we look at term plan, it has to be looked upon as purely protection. At life insurance, we shouldn't be looking at anything in return. But if you say that, Nisha, we already have some life insurance policies which were investment products, then how do we look at it? Then what we'd say is, evaluate how far are the maturities, how many years you need to pay, how can you avoid paying, are there options to exit or withdraw? These are some important pointers which one needs to keep in mind. So, term plan, a little more information on term plan. It hardly costs anything. Okay, say you are taking somebody who's in their late 20s and early 30s, being a non-smoker, life insurance will cost approximately for a crore. and your income needs to be around 5 lakhs to 6 lakhs. Being a non-smoker, your premium range will be in the 9 to 12,000. Okay. One of the most important mistakes that most of the people make is you buy a term cover today, but everybody wants a cover till the age 90, 100. Something should I receive, I should receive in return. But life insurances, especially term plans, are not for receiving anything in return. They are basically trying to protect you. So we need to also keep in mind time value of money and inflation. As you are growing older, say 10, 15, 20 years down the line, value of 1 crore will come down. So we have to enhance your term cover with time by buying a new policy, or we look at products which are going to take care of your needs. If your needs are taken care, then you don't need a term plan. So it's important that this aspect is integral in your portfolio. Whenever you look at term plan, you need to map, say, 5 things: your parental responsibility, your spouse living in case something happens to you and she's a housewife, your child education, your liabilities, and anything that is apart from these four, any other responsibilities which are there. These are the core 5 things which one needs to make sure as a calculation how much is enough on a term plan cover, right? So that's how you manage your risk protection. And this is how we look at insurance. Whenever we looking at life insurance, it has to be only term plan, which every company will have to offer you. You need to buy that till the age 60 or your retirement age that you choose. We are in the world where we talk about fire, right? Financial independence, retire early. So when we are looking at that part, then you need to take coverages till you are working age, because if you live that long, you will make that kind of money. So important that you take term covers till your working age, and not till 80, 90, 100. That will increase the premium that you have to pay, and the value when you turn 80 or 90 will, of that 1 crore will be hardly anything, right? So the multiple needs to be kept in mind, and the age till where you want to get the coverage done, right? So very, very integral part of any journey, financial management journey that we start. uh, it's a term plan. Second most important, I think health insurance is something which we were forced to learn, or maybe we were forced to buy during COVID, right? I mean, the amount of queries we answered during COVID for health insurance were immense, right? We don't like to pay money from our pocket, so that is why we transfer the risk to insurance. So when we buy health insurance policy, it means your hospitalization expenses are taken care. Now, here again, a classic example. You might come back and tell me, Nisha, we have a health insurance policy through our corporate where we are covered. Now, health insurance coverages will be very limited per se, right? I gave an example in the previous slide where you can't tell the ailment that my insurance is only 3 lakhs, come only of that much of cost. It doesn't happen that way, right? So, in health insurance, it's integral. While you buy a health insurance policy, you need to take into account the health inflation, your current lifestyle, the way you eat, the way you sleep, the way you work or work out, right? These are important parameters to decide the coverage of your health insurance policy. It has to be sufficient enough. In a metro city, for a family of three, two adult, one child, or two children, you should at least have a 20 to 25 lakh of coverage. The reason being, in today's dynamic world, everything is so fast moving, we tend to ignore our health most of the times. So, health insurance will come to your rescue whenever there is an hospitalization. So, here is a classy example. Suppose, how, I mean, if you come and ask me, Nisha, apart from the actual hospitalization, when will health insurance pay me? So, say you had series of fever for 3 to 4 days, and you went to a local doctor, which is the general physician. He gave you some medicine, but fever didn't come down. On the third day or a fourth day, you go back to him and you say, "The fever has not come down. What do I do?" He will tell you, "Go and do these blood tests." So, at that point of time, when you go and do this blood test report might say you have a typhoid or a dengue or a malaria. and you need hospitalization because your platelets are fluctuating. At that point, when you need hospitalization, if you have a health insurance, it will, you go to a hospital, show your health policy, and you get a hospitalization, you get the treatment done. And once you're discharged, doctor will say, come for a regular, I mean, follow up check after 8 days. Now, the journey from identifying the fever to getting a blood test done, this portion is called pre hospitalization. These expenses are covered under health insurance claim. Hospitalization, definitely everybody knows that hospital expenses, these are paid. And post hospitalization expenses, these are paid basically because it's part of the same claim, right, as a journey. So these are post hospitalization expenses. So pre, during hospitalization, and post, these are three major expenses which generally your health insurance policy will service and give you the money. Another important part, because we are in the digital world, most of them that we interact with, they say, why can't I buy it myself? Why can't I buy it online? Right? So, very important for everybody to know on health insurance policy is you need to have somebody to service it. Suppose you did all the research, you went and bought the policy online. Is your family capable of buying the policy? I mean, servicing the policy during claim, taking care of you and taking care of the policy servicing also. That is why you need an advisor who will service the health insurance policy. Integral part of your wealth management portfolio, whenever we look at, because again we go back to the pyramid, one ailment might take away all your life savings and it might affect your other goals, right? Then we go to the third insurance, which is disability. Major of the times whenever we have interacted with so many people, people speak about death through life insurance, it's covered. Hospitalization, that is covered. We forget to speak about disability. What if you don't die, and what if you don't go to hospital, but there is a disability that you are permanently disabled, temporary disabled, partial disabled, right? How are these disabilities covered? Are there insurances? Yes, there are insurances. Uh, for a layman, we can say it's a disability insurance, but if you have to look at a product, it is to be supposed to be a personal accident policy, right? So, personal accident policy is a very integral part, much cheaper than what we pay for a life insurance and a health insurance. It's important to have as a part of your portfolio if you travel locally. If you, even if you had a fall in your building while walking through the staircase, or slipped because of something on the road, that if that brings you some disability and all of that, yeah, that is covered. So even your corporate might cover you. This policy generally is defined as GPA, Group Personal Accident Policy. If you're covered under corporate, great. If you aren't, then at least you need to make sure that you have a personal accident policy which will cover you of disabilities. Disabilities don't come by informing us, it just comes, right? So it's important that disabilities are also accounted, and you need to take care of it accordingly, right? Home insurance. I mean, if we look at home insurance, right? I mean, we pay crazy EMIs to have that our own house, right? That feeling of house. Or if you're in smaller cities, not from metro cities, you will have your own independent houses, right? You buy a land, build a home. You have such so expensive stuff put up, electronic gadgets, equipments, so many stuff which you decorate your home with, so many things, right? So home insurance is also very equally important in an insurance portfolio, because whenever we look at a health insurance on a home insurance part, uh, especially when an unforeseen event happens like floods, earthquake, fire, burglary, all of these gets covered under natural calamities and others, right? So home insurance is also equally expensive, equally required. It's not that because you've bought expensive stuff in your house which needs to be secured. So have a home insurance policy. To start with, have a conversation with an insurance advisor who will guide you and help you sail through a situation. We just saw so many videos and images which we saw of Uttarkashi. the way the homes were just swept off because of the rains, and the way storm and all occurred, right? The floods. So if those houses were covered under an insurance policy, they will be paid for the construction and all the stuff, all the other stuff inside the house, right? So again, home insurance important. You need to have it part of your portfolio, right? Travel insurance. Why did I include this as a very important part in your insurance portfolio? Because you might have saved a lot of money to go for that one foreign vacation which you always dreamt of, right? And if you didn't buy a didn't buy a travel insurance policy, it might end up in a situation where you have to pay a lot of money from your pocket. Travel insurance does not cost much. It can be for a limited number of days, starting from 0 to 7 days, 14 days. I mean, depending upon the insurance company, it will cover you for delayed flight, lost baggage, lost passport loss, hospitalization in a foreign country. If the death happens in a foreign country, can the remains be brought to India? How will the body come to India? There is a lot of cost to it, and a lot of permissions and visas, different kind of visas required, right? And somebody who's going to accompany that person also needs to be get paid. So all this expense, if you don't have a travel insurance, you have to do it from your pocket. So it doesn't cost much when you travel, and when you saved up so much of money for the travel, you pay so much of cost. Travel insurance is supposed to be that compulsory cost that you pay while traveling. If you know, whenever you book a railway train ticket, right, there is an insurance given, especially after those some accident a few years ago. Back to back accidents happened of the trains where a lot of people died. So government also says that buy that insurance. So if an agent is booking a train ticket for you, he might tick that, and some few paise are taken for you to get covered on a accident. So that's basically a travel insurance is what is getting issued in your name, right? Vehicle insurance. Uh, I would like to cover this point, which is also equally important. We have experienced when people buy two-wheeler. When you buy, I think 5 years is the insurance cover for the third party, which is given compulsory, and rest is variable. After 5 years, you're still supposed to renew your policy. If you're driving or riding without an insurance, vehicle insurance, it's a crime. If you bang somebody and that person dies, it's a crime. You could be put behind the bars. So vehicle insurance is equally important. When you're going to vehicle insurance composition is between comprehensive related to your vehicle, and then there is third party. Suppose a third party damage happens to the vehicle, that is the point when that amount can be received from the government for the damage to the third party, and GST is another third portion which is part of the premium. So motor insurance is also equally important, be it two-wheeler, be it car, whatever you drive, but you need to maintain the insurance and need to have it. Now, all this insurance that we spoke about, you can actually upload it on your DigiLocker, and this is visible. Now, when we look at insurances, the last insurance that I spoke about, motor insurance, right? So, motor insurance, when we speak about, we are a funny country where we all renew motor insurance without a doubt, right? But when I ask somebody, you need to buy a term plan. I think, can we do it next month? But the budget is tight. Uh, we said health insurance is important. Uh, it's too expensive. I can't afford it. But when you're standing and buying a most expensive phone which is available or a latest upgrade available, that phone does not find, I mean, you don't find it expensive, but paying premiums, you find it very expensive, right? It's a very subjective topic, but it's important that whenever we are designing a portfolio of insurance, these are six very, very important insurances that every person should have. I've tried to touch upon the basic features that you should have. But if you say, I can't shell out money for so many insurances, start with term life and health insurance. I'll cover some slides on life insurance. I'm going to drink some water. So here are some myths. Okay, very classy myths when we speak about importance of term insurance and why you should buy. We have people who come back and tell me these stories. I'm single, I don't need a life insurance. Suppose if you today you are single, eventually if you get married, have a family, or your parents become dependent on your income, you should have a term plan in place or enough savings in place. If you are not able to, I mean, why should you buy it today? Because you're hale and hearty. Life insurance, younger the cheaper is the thumb rule for it. So if you are 25 and buying a cover, and somebody who's 35 buying the cover, premiums will be poles apart. Other is only the breadwinner needs the coverage. So this is a myth which we want to connect when we say that women who contribute to the family's income but are not getting term cover for themselves. Now, when I say this, how does it mean? Basically, say 100, husband earns 100 rupees and the wife earns 60 rupees. So their total family income is 160. So we say, most of them, they say, she does not contribute much to the family's income, so it's okay, she does not need a cover. But suppose something happens to her, right? Your family's financials will go for a toss. Emotionally, a lot of loss, but financial loss will also occur, right? So it's important that not only the main breadwinner of the family, but also the other contributors of the family members should have a term life insurance. Young people can't afford life insurance. I think it's a tricky space these days. Lot of youngsters, Gen Z, Gen Alpha, whatever you we want to name them, right? It's important that you buy a term life cover. If your parents are dependent on your income, save money early at start for a few months. Because you're young, it will not cost much. Take it today, right? You might say my employer insurance is sufficient. The next myth. But these are insurances which are sufficient, is what you think. But this will work only till you work with them. What if you're laid off? What if there is a change in management? What if the terms and conditions of the policy change and your cover reduces as per your grade and all of that? Then at that point of time, your employer cover might not be sufficient. So you rather buy it when you're young. You have your independent policy in place. The next myth is life insurance is a savings plan. Anything that you expect in return from a life insurance plan is like a suppose if I'm going to serve you food, right? I'll take one big bowl. I'll put roti, rice, dal, and sabzi. Everything in one bowl and give it to you. That I'll say, okay, eat. Will you like it? The answer is no, because we want it elaborated, spread across on a plate. So when we are trying to mix insurance and investment or a savings plan, it will taste like that, right? Everything in one bowl. So it's very, very important that whenever we are looking at uh, buying, investing in a life insurance, it's a bad idea. It's like you're giving everything in one bowl. It's important that you do it separately. You have your term plan and you have your investment separately done, right? Another myth: healthy people don't need it. Most of the times when we have interaction, people say, I'm fit, nothing will happen to me, I will live longer. We are not born with expiry date. So there are very young and very fit people passing away these days. We hear out so many news, right? So it's important that you buy it today, right? Another typical perspective: term life is a waste of money. In the previous slide, I covered that under motor insurance, it's mandatory. We generally renew it without fail because it's a mandate by RTO. And in term cover, we say it's a waste of money. So when you renew your vehicle insurance policy and you don't bang the vehicle, you don't go and tell the insurer that I didn't bang the car or the vehicle, give my money back, right? We never think about it on those lines. But when we speak about term life insurance, we say it's a waste of money because if I live longer, I will not get anything. It's a waste of money. It shouldn't be treated that way, right? So these were some very important myths that I thought should be covered to know more about that importance of term life insurance, because more and more younger people are dying because of whatever risk factors that they are facing. So it's important that one should get secured. If there are liabilities which are there, that they need to be secured. along with any other thing that we spoke on this myths of life insurance. The next slide we like to cover is on health insurance, right? What happens if there is no health insurance, right? There are a lot of out of pocket expenses that will turn up, right? If one ailment arrives and you saved, say, over 20 lakhs over a period of 7 8 years, and in one ailment, one hospitalization, that money will go away, okay, because you didn't take a health insurance. You might not be able to even afford a good quality healthcare. What do I mean by this? Basically, I mean, we all have stopped going to a local nursing home, right? We all want to go to the fancy hospitals which are there around our areas, right? Our near our localities. So if you need access to such good healthcare, you need to buy a health insurance policy, right? Suppose you are the breadwinner of the family and you are sick and you never bought a health insurance policy, then it will become like a burden to the family because they have to find out how to fund your hospitalization, take you home, right? So it becomes a financial burden. We need to take care of that. Health issues can strike anytime, right? I mean, as we spoke on the life insurance slide, where we say we are not born with an expiry date, so we don't know when is the last day of our life. Same way, and no ailments are defined in our body that this is the age or this is the date when a ailment will happen to you, right? And the last part, rising medical inflation. If we look at data on health insurance, or the medical cost, the healthcare cost, the way it's risen in last 5 to 7 years, it's approximately 14% year on year. Healthcare has become that expensive. So if health insurance is not in place, then it is going to cost you a lot. Apart from these, also multiple things can come up, right? So don't delay. The best time to get insurance is always yesterday. The next best day is today. I hope this was value to everybody out here on the session. And thank you for patient listening. I'll be open to answer questions.
There are some questions in Q&A. Is
Okay.
it?
I'm unable to find that box. Okay, I found it. Yeah. Yeah. What to do when life insurance company refuses to give life insurance coverage due to PED for which oral medicines are taken? Can be complained to IRDA? Is it discretion of insurance company? Fulvarji, generally on a oral medication like your diabetes, BP, or cholesterol or something, insurance company cannot deny you a cover. They might ask you to pay additional premium, which is insurance terminology is called loading. So it's important that disclosures are made right, and you are, I mean, you are eligible for a life insurance policy. And if you say, can we complain to IRDA? Yeah, before you complain to IRDA, you should go to the escalation matrix on the insurance company's website, or at least try making an application or a proposal through an advisor who will help you sail through a situation like this. So next question is Amitava. Nowadays, the chances or happening of divorce among the people, mostly in the age group of 25 to 60, are almost ruining the families affected by sudden financial expenditure in the nature of lump sum and on a regular or periodic way, coupled with mental agony and frustration. Whether the importance of this kind of social trauma are not visualized by the policymakers or product developers, how this peril can be managed, please suggest with your financial plan. So, Amitava, I think if there is a uh, say term life policy bought with the MWP Act, right, Married Women Protection Act, the moment there is a divorce happening, then you should be looking at discontinuing that policy, because in case of death, the beneficiary will become that wife, and that can be challenged in court. Uh, Policymakers do look at situations. In health insurance, because it's an annual contract, it can be changed and altered or can be ported. But in life insurance, it's a little difficult. That's why we say life insurance has to be purely term plan, and then you look at investments separately. with uh, things changing so dynamically, it's very difficult that a product concept is visualized, interpreted, and comes out as a product, right? So it's a journey, because there are IRDA approvals required, and we have to figure out how will it play in the market for the insurance company to run that product, right? Ultimately, it is still business for them. Whenever we look at a situation, first 2 3 years of marriage, let's not look at clubbing all the investments and insurances. Let it be separate. And with time, when things are fine, one can look at having it commonly. I think that's all. I mean, I can currently look at as an answer. How to calculate human HLV? HLV is basically, for all the audience here, it is human life value calculator. It's a way where uh, you are trying to calculate your human life value, and that is, if whatever the answer comes basis the calculation, that's the kind of coverage you need to take. Swarnava, it's not a very straight or a easy reply that how do what do I add and subtract. There are most of the life insurance companies will have this calculator online on their website. You can avail that. They will ask you few questions. Basis the input, value will get generated. How to select an insurance company? Anjali, here are two answers to this question. One is, when you're looking at life insurance, what is important, how the claim settlement has been there, and how, I mean, have you declared when you buy a product, whether have you declared everything? Number two. Number three, there needs to be somebody, an expert, who will service you during this, when you're in case of claim arises. Okay, this is for life. On the health insurance, again, claim ratio is one parameter one can look at. In case of health insurance, it's incurred claim ratio which matters. How do you assess a health insurance policy? Plus, there has to be an advisor to service you in case of a claim whenever it happens. So it helps you sail through a situation, right? Vikas ji, thank you so much. Which insurance is useful for loan? Suraj ji, I assume it's you're mentioning a home loan. So major mistakes that we have experienced is a banker has a target to finish on selling the loans. Okay. And when they are pushing you to buy I mean, complete the process on the home loan, but they have to tag along an insurance product. When you go and tell them that I cannot afford the premium because it is increasing my EMI, they might give you an alternate insurances, which could be a critical illness policy, or it could be a home insurance. If it's a housing loan, you have to take a term plan, which either there are two options: you buy a fresh along with the loan, or second, you assign your one of the term plans to the loan. So what happens is the loan is secured. That's all the banker wants, that in case of death or an unforeseen event, the loan is protected and banks will receive their money. Is it advisable to have multiple insurance policies like LIC and other private companies? Sunil ji, if it's a term plan, you might have a multiple policies, because when you started, you would have always bought a LIC first, and with time you would have realized what you need is a term plan. So when we look at term plan, generally, apart from the parameters that we spoke about on the claims ratio, servicing, and other pedigree of the insurance company, what we also look at is how will the claim be settled? How easily will be the claim settled? So I think this is very, very important that you have the coverage. Multiple insurers, claims will be a little slower while settling, because your family has to go through multiple companies to process the claim, right? So many documentation. There will be lot of audit, or there will be lot of inquiries when a claim is getting settled. So it's important that you look at uh, insurance company where somebody is going to service you upfront. Okay. uh, Tell us more about the insurance which is provided by the employer. I think employer insurance generally will depend upon company to company. So majorly three type of insurances are given by employers, which is GTL, group term life insurance. If employee dies, the family will receive money. The second is your group health insurance, group mediclaim, yeah, GMC is the terminology which is used. If there is an hospitalization and members are covered in that, then yes, that's the group, the hospitalization cost is covered. Third is GPA, group personal accident policy, which our insurance company generally covers on disability. I think how to select company I just spoke about, other than term plan and Mediclaim. Uh, Sunil, I'll go back to a previous question. I think in life insurance, other than if you continue and say that protection of loan or liabilities, I think term plan plays the bestest role. If it's an asset on which you've taken a loan, you need to have the asset also protected through insurance. And other than health and life, what you can take more is critical illness cover. If there is any life-taking disease, which an insurance company wants to cover, it's defined under the product. You will receive a lump sum. That's a beautiful product, little expensive, but it's worthwhile having it in your portfolio when you're looking at covering yourself fully. Suraj is again asking which insurance is useful for protection of loan or liabilities. We just spoke about this, Suraj. Basavaraji, no. Life insurance is generally on individual level. There could be joint life cover between husband and wife. They are joint life covers, but I think now not many insurance companies are offering that. And children don't need a term cover because they are not making a difference to the family's income. So that is why people who, because income proof is required while buying a term plan. Term plan is generally for people who are who has income, and we can show it on to the insurer while buying the policy. Okay, what do you suggest? Only base health plan or base health plan and super top up? So I'm not a fan of super top up. Maybe someday when we do a session on completely on health insurance, we cover more areas on what happens is have a base policy which is very strong, at least a 20 lakh cover, rather than having a 5 lakh base and a 50 lakh cover on the super top up. There are two, three pointers that we need to keep in mind. Your base policy, uh, suppose exhausts, then you need to get the super top up triggered. Your family has to go through the hospital TPA desk twice to get the super top up activated. Your base policy might not have any restriction on the room rent, but super top up policy might have restriction on the room rent capping, or the room category that you select. So it's very, very important that when you're looking at health insurance and if there is an affordability, please buy a base policy only. What is Bima Lokpal? Okay, Bima Lokpal is uh, entity which takes care of complaints, and where there are times where insurers are also dragged there, and insured also can go and complain. How often should insurance policies be reviewed and updated? Why is it important in risk management? Insurance policies need to be reviewed every year, or at least when you have a life-changing event happening, like buying a house, getting married, having a child, losing a loved one, or you becoming the core breadwinner of the family. These are major life events where you need to look at reviewing your life, or reviewing your all your insurance policies. But apart from that, you can before you renew every year, you can always look at it, because the product range which is getting offered these days are so wide and so varied, that you maybe what you bought last year is outdated. You just need to migrate to a better policy. Next question is, does ULIP plan be taken instead of term life insurance? Will it be beneficial, or should someone treat life insurance or de-risking? Okay, very good question, Anshul. Life insurance has to be purely term life insurance, because again, you're trying to mix when you buy a ULIP policy with not taking a term plan. ULIP policy will have a maturity date. It might be a 10, 20-year product. But after that, what? You might be older, and term plan might be very expensive for you to buy or afford it. So buy it younger and cheaper as a term plan per se, which will work better in your favor. And for investment, you can consider investments rather than mixing insurance and investment. If someone has both term life and health insurance, then it is it compulsory to buy accident insurance? Anshul, accidental insurance is basically covering disabilities which your term life and health will not cover. If you die, the family will get the money from the term plan. If you die in the hospital expense will get covered by the health insurance, and the life insurance company will give the death benefit. But if there is a disability, you come home with a leg broken permanently, or a hand broken, or one eye lost, or say one organ lost, then at that point of time disability insurance will come into picture. That is why the importance of personal accident policy. So Aruna, there are typical definitions defined on a personal accident policy. Maybe someday when we have a session on personal accident policy, you evaluate more on this. But standardly, if I have to tell you, there are thumb rules defined on a personal accident policy. How are you defined as a temporary disabled, partially disabled, fully disabled? There are criterias how it is defined. Which is better, term plan versus ULIP? Puneet, term plan is basically death benefit, where you are trying to create a backup for your family, financial backup for your family. ULIPs will be okay. Here is okay. Since there are 2-3 questions around the same thing, let's look at this. Okay, say somebody who's 25 or 30. Let's look at 30 age. Okay, you are 30 years of age today, without any life insurance. After listening to me on this session by NISM, you are eager to buy a life insurance, right? What you should look at buying a term plan. Suppose you go out in the market and check on term plan. Say 1 crore cover for a 30-year non-smoker without any ailment might cost around 12,000 rupees for a 1 crore cover. Now, when we look at ULIP, right, to get a 1 crore cover, you need to pay annually 10 lakhs of premium, like 10 times multiplier to get that cover, right? Are you capable to buy a 1 crore ULIP cover, which will cover your death in case it happens within the first 2, 3, 4 years of the policy? If the answer is yes, then you should buy a ULIP. Otherwise, because your investment will happen, you're protected also. The downside is that ULIP cover will have a end date, right? ULIPs generally are for 10 years and 15 years or 20 years. So you need to have a term cover. ULIP will always be optional, right? How can I prioritize buying insurance while I'm struggling financially, either with a low income of 20 or 50,000 per month, or when I'm unemployed, while also trying to take care of my family's basic needs? Okay, so you need a on this part, you need to again circle back to your budgeting. You need to create buckets and invest for emergency insurances, and also need to create premium backups so that if you're unemployed, how will the insurances take care? So salary 20, 50, so 20,000, I think 2.4 lakh means you will get a very basic life insurance. But health insurance, you're eligible. At least start with something. Have a basic cover in place if you're not able to afford a lot. That's how you will be able to create that discipline and that habit. Oh, yes. Anupji, a very interesting question. Say, example, I run a company and I am the key person, and my company didn't buy a key man insurance, didn't protect the business. If I die, the kind of money or revenue which could have been generated because of me being alive in the company was much more higher than when I'm in dead, right? So if I'm dead, uh, my skill set is gone. I'm gone. It's gone with me, right? So if the company bought a key man insurance in my name, whatever the sum insured that we chose basis the balance sheets of the company, my company will receive the money, right? When they receive that money, it will help them sail through a situation where the instant loss of me, at least financially, it will not get affected. So if that key man insurance is not bought, that's the loss you bear. And looking at businesses, say that was on the life insurance of the key man, but apart from the property or uh, the factory, suppose if you're running a factory and you're not availing the structure insurance or the workman compensation, which are important as per the rules, then any loss, you might have to pay it from your pocket, right? So that's another failure that comes into picture. What if I want to do analysis of by myself, not via advisor? It's an anonymous attendee. Can you please elaborate more on this? Analyze what? Life or health insurance, or which insurance? What if I want to do analysis of by myself? Okay, but this is about what? Which insurance are you talking about, Anjali ji? From where to policy should we buy? Whether we should go through online platform or through agent? What will be the scenario in claim settlement in various types of insurance? Jairam ji, what is very, very, very important is in insurance, especially, I generally say that buy it from an advisor who's an expert of the subject matter and also knows how to settle your claims, and is also dynamically reading or knowing the industry, which kind of products are available and which are best for you. So I think that's the bestest way to look at it, because when you buy it online, who will service the claim? Say example, you did all the evaluation and you bought a policy through an online platform. You are sick, right? Your wife is not able to access the policy that you bought through online. Will your wife be on the customer care call, talking to the customer care, waiting in the queue, the call gets disconnected, call back, and all of that, right? Rather, your wife has to only call the advisor and say, this claim is happening, we need support. Advisor will take care of it. Padmavati, when we look at ULIPs, when you are looking at investments, then we look at ULIPs. But when you're looking at life protection, you need to look at term plan. We just gave an example how much it costs to buy a term plan and how much it costs to have a ULIP through the same coverage, right? Okay, the husband kills the neighbor, kills the wife because of the insurance money. I think if the husband is killing the wife for the greed of the insurance money, there is a lot of investigations which happen, and after lot, and there are third parties who are appointed to investigate. They look at your social media accounts. They look at go to your employer. They go and look at inquire around the society that you stay. Money is not that paid so easily as we see in movies. So it's important that it happens. If the death is happening, insurance company should cover. But if the death is happening by the husband killing and it's proven that husband killed, husband will never receive that money. Okay. Technical jargon which are not easily understood by the proper proposer, company payment, co-payment facility, daycare. So Amitavaji, that is why I said you need an expert who will be your advisor on insurance, and who will help you sail through a situation to educate you and help you buy the right product suitable as per your need and your requirement. If any person is convicted by the court and hanged, will he get insurance? If he has bought insurance before he has done all of this, uh, this is going to be tricky, where the insured beneficiary can get this challenged if the insurance company denies him the money. I purchased term plan when I was 24 for 50 lakhs and I'm 40 and want to increase the amount to 1 crore. Will they do medical test? In life insurance, you need to buy a fresh policy. Many times there are offers which come at the time of renewal that you have been a valued customer. Do you want to enhance the cover? The moment you say yes, they might ask you for good health declaration. So if you declare something like a health issue, they might ask you for medical test. Some insurance companies are happily able to issue the coverage without medicals. So riders which are accident and disability, what we generally say is uh, the rider which is available through term plan as accidental, it is basically if you die because of accident, then the sum insured will be around the accidental cover and also the term life cover. That's the total that you receive. And disability, I don't think so. Term insurance covers the disability, but they will give you a waiver of premium on accidental disabilities is what the rider is in term plans. So, term plan will cover that in case of a disability or future premiums are waived off. So that should be opted. It does not cost much. ICICI Prudential generally has it inbuilt. Rest of the insurance companies offers you with a smaller premium. Until yes, apart from the corporate covers, you need to have your independent policy because that job is not lifelong. It's no guarantee that job you will also remain with the same company for long. You should buy your own policy. Uh, Nariji, what is important is when you are calculating through HLV, there are multiple ways where you can calculate your life insurance coverage. What is important is whenever you're buying a term life insurance, some thumb rules we say that okay, you don't want to get into more nitty gritties. 10 times of your annual income is basic, you should have. Today's date, dynamic times, we say 20 times. Or you buy the coverage till the age of your younger child's 25 age. Or there are other ways where we look at when you can calculate the HLV. Health insurance does not cover cosmetic expenses because you're trying to beautify yourself. It is not mandatory. Chetan, when I get this ankylosing spondylitis, we have experienced this in the past with a lot of clients. Insurance companies generally deny this. Uh, but if you try through some advisor, this might sometimes get through during the last year of the financial year, last month of the financial year. Sometimes underwriting gets little linear. Term cover is basically covering your death benefit. So if your income matters to the family, you should have a term plan and you should declare your spondylitis. Health insurance policy from PSU or private might take private because of the no room rent capping. Suicide is when somebody dies themselves, right? Takes that step. So that is when they define suicide. So we look at the policy wordings. Always what's important while understanding a product is the policy wordings. That's what the product is, right? So that's the Bible basically. So when we look at the suicidal clause, we see some products which are there for the term plan where they say within the first 6 months, 9 months, 12 months, if there is a suicide, certain percentage of the sum insured is still paid. After a year, the whole amount is paid to the family. Yes, I think at the start, Sahil announced that on the NISM YouTube channel, this session will be uploaded. Sahil, I think I've covered all the questions. Any more questions from the audience?
So, ma'am, are we good to end this session, or you are trying addressing more questions?
Okay, I see some questions in the chat box. Should I answer them?
Yes, you can answer a couple of them.
Yeah. So there's one question on NWP Act. Who will get the money in case of insured death? Is nominee places role? So under MWP, generally nominee is always wife. You cannot change the nominee. If there is a divorce, then you better close that policy and buy a new one. Under PM Suraksha Bima Yojana, the generally it is we buy it through the banks. We need to attend the bank where we go and educate them, and we speak about it. I mean, not educate. We go and apply for the claim. There is a claim form and the required documents, and that's how they will give us the money. You need to go to the bank for submitting the claim of Jeevan Jyoti. Okay, here is a good question. Um, if someone continuing health policy since 15 years and now he diagnosed this ailment I don't understand, have to need to declare now. So if you are going to change the insurance company or enhance the cover, yes, you should declare whatever ailment you have while at the time of enhancing the cover. uh, there's some question called, my policy was rejected due to osteoarthritis. They have no add-ons for osteoarthritis. I assuming you are saying this osteoarthritis for your health insurance. I think osteoarthritis will still be covered. It's only that suppose if you're asked for a surgery, then insurance company wants you to get through the surgery and then come and apply for insurance. Why people still are not getting insured? I think, Biswa Deepak ji, this is a pain that a financial planner is experiencing every day that we speak to. That why it is so important to have a health insurance policy, and one needs to make sure that one covers themselves. But yeah, irony of life, insurance is not mandatory in a country. That is why the situation of being like this. I think, Sahil, I've answered most of the questions. I think I'm good to close.
Yeah, thank you so much, ma'am. I would like to extend a heartfelt thanks for taking the time and speaking at the webinar. Your insights, expertise, and engaging presentation made truly a lasting impact on the audience. Thank you again, ma'am, for your time and knowledge. Wishing you a wonderful day.